Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Scottie Resources. Scottie's traded on the TSX.V under the ticker SCOT and on the OTCQB under the ticker SCTSF. And we're joined today with the president and CEO of Scottie Resources, Brad Rourke. Brad, always great to get you on the show, and it's been a while since we've talked. We actually haven't chatted since January, so a lot has happened. But the biggest thing is you've had a drill program in 2024 that was initially slated for 6,000 meters. You ended up doing closer to 10. And so you biggie sized your drill program, and you just released to the market your first drill results from this year's program, the first assays. A couple really high grade hits here. 8.78 grams per ton gold over 9 meters, 12.2 grams per ton gold over 3.5 meters. This is at the Blueberry contact zone where the majority of the focus was, but you got a couple different veins here you're bringing into the picture. These are just the first results from this year, but walk us through some of the key takeaways and what you want investors to get from these assays as they're starting to come out to the market.
Sure. So at the beginning of the season, it's been very difficult, this industry. We put a financial number together. That's what we were going to spend. And when I told the market I'd be satisfied if I got 6,000 meters out of that, I would have been, because sometimes things can go wrong. And if you overpromise, underdeliver, you get yourself in trouble. But we just kind of had very little speed bumps in the road. And we were using a little bit more helicopters than we usually do. And we got 10,000 meters in, but we just kept to our budget about $4.5 million. So we're pretty pleased about that. Yes, this is our first news release of the season of a 10,000 meter drill program. Yeah, we're happy. I think when you understand that, our goal is to put out our first resource, perhaps at the end of Q1, beginning of Q2, those are meaningful intercepts because, we're connecting shapes and dots right now and just trying to get a cohesive working model. So they're very encouraging. Of course, I love 100-gram meter holes. I mean, there's an 80-gram meter hole there, but, those in that discovery stage. But this is actually just stitching everything together. And so we're very, very impressed. Those are mineable intercepts. So that's great.
Well, Brad, let's dig into that a little bit more about building the shapes for a resource, because I think a lot of people only look at, hey, is it a 100-gram meter hole or not? And even then, I don't think they're looking at the continuity, how it's tying together. These holes are important, and you were explaining to me off mic that some of this is really going to dial in where prior holes have been in relation to these holes for building out a resource. So maybe just speak to that idea a little bit more.
Sure. So I think 2 seasons ago, we basically just did a 100-meter diamond pattern. Like we just kind of blanketed this. I'm just talking about Blueberry right now, because there are 3 different type of faces that we see in our heads. But, we just did this 100-meter diamond pattern because we were assumed, because we weren't working with a resource modeler at that time, because they have to be independent, that if we just put one hole in the middle of that, that's 50 meters from everything. And that hopefully will get us to our first resource. So it seems to be working well for us, and we're targeting 1 million ounces. Now, we're not thinking that that's going to move a needle, right? If I'm targeting 1 million ounces, I don't know exactly what it's be, but we will in a couple months. But really what we're going to focus on is the economics of that and how little drilling we did to achieve that. So I think we've always been shorthanded, always been small little Scottie. But, with that resource, we'll probably only constitute about 50,000 meters total of drilling. We have 70,000 meters that we've done as a company, but there's a lot of Domino and C&D and George River that's not going to be included in that resource yet, but they're all viable projects that just need more drilling. So I think if we get that out and we're close to being in the range of what we're targeting, it's more the economics on that and how well we did that for a little bit of money. So I think investors should respect that and might make sense to them. And then, of course, we really want to get at the economics of the ore, meaning we're at Scottie, was shut down, so we're a big part of this resource, or 25%, I assume, is coming out of the Scottie Gold Mine. When Scottie shut down, they shut down right in ore. It never got mined out, so to speak. So we're right at faces at Scottie. And because there was a 10-gram cutoff in the days gone by, you drop that down to a 2.5-gram cutoff like everybody else in our area. There's a nice halo. Spotty Scottie, which is what it was called in the 1980s, becomes very contiguous, very, very viable. And so we'll see, we did 15 holes in there. So those are kind of confirmation holes in around Scottie. But we hope that'll be, say, a quarter of that resource. So easy ounces to come up. And then the rest at Blueberry. But really what we want to show is we're right on surface. It's just the development costs are very minimal. It couldn't be less than where we're at. So that's kind of what we're going to lead with in 2024, but I'm still waiting on results from this year. And so, just like everybody else, we're hoping, but we haven't stumbled yet. So we're feeling pretty confident.
Well, and I'm glad you broke that down. So, like, let's just say about 1/4 in the Scottie mine area, and then 3/4 in the Blueberry contact zone. But you haven't included Domino, and you haven't included some of the other targets and some of the other deposits into this first resource. But your goal is to highlight the economics around that. I think what you said was really significant, Brad. That you've only really drilled 50,000 meters to, let's just say, get somewhere near a million, or that's what the goal is. I mean, when I look at other companies, I see companies drilling 100,000 meters or several 100,000 meters to get it close to a million. That speaks to how quickly you can mass up in this area. So looking ahead, as this drill program continues to feed the beast into the resource model, maybe just speak to what you've done with a limited budget and limited drilling to mass up so quickly. And people will want to know, well, Brad, what's the upside? Is there still another million there? How do you grow it from there? Maybe just speak to how much you can mass up with the amount of drilling you've actually done, only 50,000 meters.
So let's think like an investor, and I think I am an investor. That's how I got involved in this company, and I certainly have more positions than just what we see at Scottie. What I would hope people see, and it's what I kind of see, or I'm hanging my hat on, is that the question that you have to ask yourself now. There's lots of deposits, but not all deposits are created equal. You could have a half-gram deposit, you could have 7 million ounces, you can have, so we're in a higher grade nature. If grade is truly king, then do I need that 5 million ounce deposit for a standalone project? I do not, because I have mills on either side of me, of which we know we're metallurgically compatible with. CIL plant down at Ascot, we're just working out a few of their issues right now, but we have all the confidence in the world that mill turns no matter what. And then the Brucejack, which is as a gravity flotation plant. So we did the met work on that. What we really want people, or what I look at, is the only question one has to ask themselves is, what is the value of an ounce of gold in the ground? And not all the ounces are the same. But because I have a permit, because I'm on a road between two mills that don't have large mine lives, I'm going to get a premium to the general answer. And if 3-4 years ago, you're throwing the football around the table and going, what's a value of an ounce in the ground? I think the standard answer would have been, you're going to get 60 to 75 bucks an ounce in the ground, right? And that's, there's kind of a general rule or whatever from days gone by. Well, gold goes up $75 in a day now. So, and we're talking Canadian dollars, what is it? 3,700 Canadian for an ounce of gold right now. So I think that's the only question people need to really answer. And I have my ideas, but I certainly could be wrong. But it's certainly going to be more than $75 an ounce in the ground. That's how I see it. Because we're permitted mine. We're right at ore. Right, there's no development costs. We're very high grade, and we're on a brownfield site. We have hydropower right on the property. There's, from an infrastructure and a development point of view, it is minimal compared to anybody else that you might speak about. So I think the market's not recognizing that or giving us any credit today, but it'll change when the time's right. Again, more analysts are picking us up, more, because Ascot kind of stumbled here in the last little bit, and they're on the front of everybody's mind. It put a lot of eyeballs on us. And so we got a lot of incoming calls from entities that we wouldn't even reach out to, because we would have deemed ourselves too small at this stage. And so it's flattering, and, we're happy to get into those technical meetings with a lot of bigger entities. So it's good. It's been a grind. We haven't made anybody any money, but we haven't lost anybody any money. But we don't have hat in hand right now. We're financed. I have more money at the end of the year than I usually do going into a drill season. So that's good. I mean, I could replicate this program that we did just now next year without raising money. In fact, I could drill 15,000 meters next year without raising any additional capital from where we are right now. So we're financially strong. We're technically strong. It's just fighting a market for attention, I suppose.
Well, I mean, I think those are some solid statements, Brad. The fact that you could process not just at Ascot's Premier, but also at the Brucejack mine. You've already tested the thesis that you're close, infrastructure wise. You got the hydropower as far as the cost of electricity and cost of power. And then you also have near surface ore. So I don't think that a million ounces are a million ounces are a million ounces. There are nuances to it. And I think that you should eventually get a premium for those, but the market has to decide that. I think what we need to do now is just kind of dig into where some of these ounces are going to come from. And in this Blueberry contact zone, just based on this news, just to the point of the infrastructure, one of the veins is called the road vein because it's right off of the road. So I don't know how much closer you could be to infrastructure than that. But you got a Fifi, you got the Lemoffe vein, you've got the Blueberry vein. So a lot of different veins. Just talk a little bit more about this Blueberry contact zone and just there's almost so many veins you can't name them all, but just what is starting tying together here in this Blueberry contact zone?
So in 2019, my very first drill program, I had my presentation. I've been out and around marketing, and I show the people the presentation, Beaver Creek 2019, and I highlight Blueberry. And there was like 4 holes done in the past, and it was 26 grams over a meter. That was the highlight hole, and it was one vein. Now, you're right. We got Road, Fifi, Lemoffe, you name it. But those aren't veins. Those are sets of veins. There's over 40 now that we have found, but when we started off with just one. So I encourage listeners to get on the website, go look. If you look at our long section, what's really cool about Blueberry, it starts right at surface. So you're looking at that from a bulk tonnage and open pit frame of mind, right? And that's extraordinary. Those high grade systems, there are some out there, but you're usually going 1.5 kilometers underground, which means if you're driving trucks 1.5 kilometers up, or just that infrastructure to get to, or just adds costs. But when you're sitting right on the road, like there's no underground, you can't underground mine something that's sitting right on the road. So, I'm not a mining engineer, but you can conceptualize that with the top 100 meters, and I'm just guessing here, but I'll probably be pretty close, of the top of Blueberry, you do a slot mine because all the mineralization's contained. It's just not all. It's not a disseminated. There's a lithological contact, and just call it 40 meters on either side of that contact. One into the siltstone, one into the andesite. And for 80% of those veins, then the grade starts petering off. Now we do get a couple that just keep running forever, and it's cool, and we have to keep exploring it. But for the most part, it peters off. But what that means, it's vertical. Right on surface, you're moving a lot less rocks to get at that ore. Now, not all ounces are the same. You see all these massive big hits that we have at Blueberry, but if you're taking bulk tonnage, you're going to take a lot of dilution with that. So I think that open pitish or that slot mine or whatever the bulk tonnage would be, that grade's not going to be this 8, 10, 12, 15 grams. I don't know, but be pretty reasonable. Hopefully we fall in line with what Skeena has there, just under 4 grams, because it's very economic. Then you got to look at, while you're doing that at Blueberry, producing that Blueberry ore at the top part, you'd be putting your decline in to get down. And then it's a different mining method of which you're going after these high grade veins. And then the same with Scottie, right? Scottie's right at ore. So technically it's as quick as you could ever imagine. And Blueberry's right at ore right now. So it gives us a lot of optionalities, or, and again, we got to get the resource out. It's not the resource that we're really, really excited to get out. It's then we can start doing economics on the ore, which is really where I think we could start showing the value proposition to people, because you could turn those rocks into dollar bills in a very short period of time if the winds blow in the right direction. So that's, those opportunities don't exist. No EA process for us to go through, right? We're literally, it's amendments to permits and just getting the will of the community to move that ore, whether I ship it out. Remember, there's a deep water shipping facility just 40 kilometers down the road. I believe now with Newmont, they've got their feet under their ground with them, with the Brucejack asset. How much money does it cost, even for a big company, to find 1 million ounces? That's another question that an investor should look. Okay, if there's 1 million ounce, it's not 5, who cares? But look at how much it costs to find 1 million ounces. Those companies are smart enough to know that, hey, they have to drill. There's not a long mine life at Brucejack. And then same with the Ascot mill. They've got, half their resources sitting over at IDM, which is, they're going to have to build a 22-kilometer road right through our lands to get there, when we're less than 22 kilometers right from the Blueberry ore to that mill right now on the Grand Duke Copper Haul Road. So it might need a little gravel, but minimal compared to other type of development costs. So it sticks out. We just got to get the retail guys seeing what we see from the corporate level.
Well, let's talk about the optionality because you've got Newmont with Bruce Jack, you've got Ascot with the Premier Mine. Both of them need not really underground high grade. That would be nice, but and you could supplement it with that, but they really need a bulk tonnage method for that 1,000,000 ounces. So to your point about 1,000,000 ounces not being just 1,000,000 ounces, they need bulk tonnage. They need something close. They need something they could haul. So that's actually an option. But you also have the option that you could also build a mill, or as you say, you could also ship out the ore. So maybe just talk about the optionality you have with the nature of the ounces that you think you can build the resources on.
Sure. So about 4 years ago, we did a whole host of studies on the tails. Now, our tailings are running about 2.1, 2.2 grams average, 150,000 tons just sitting there because the lake is gone. It's just, you just drive right up there. You can put it in a dump truck. It's just right there on surface. So we did all these studies and thought about, okay, if I can make a concentrate, ship it off to Ocean Partners over it, I think it's a Malays or something. And this is when gold was 1,800. It was viable then. So, and then you look at all the concentrates ship out from Bruce Jack and Red Chris, just 40 kilometers down the road. So that is optionality. We have a business proposal that if I wanted to go clean those tails, I could send them off to Malaysia and get and clean up the environment, make a little bit of money for the shareholders at Scottie, be a non-dilutive financing. But we're always kind of waited to see what is going on with Ascot. We just thought it makes sense that it doesn't hurt them, doesn't hurt us. We clean the environment up. We both get white hats if we do a cleanup of tails because it's on the road. People see it and it'll be quite profitable because it's just takes a light grind. So we've done every study on that and then looked at shipping stuff outside of just with the port. Now, a lot of people approach me, say, "Oh yeah, and just put a mill in here." And we've had a couple of engineers, and we have a nice arm wave on what that would take. But because I have a permit, heck, I could buy a 500-ton-a-day mill for $6 million, brand new, ship it up the canal, like because we got deep water shipping right to our site, pretty much. And so it's not that expensive. But I'm just not a miner. I mean, gosh, I'm an investor who's learned the exploration game. But I don't think anything's easy. And I don't know if I need a new education on becoming a miner. But if the market forces us to go in that direction, then totally viable. And like I say, with Michael Gray's report, he suggests 3 million ounces anyways. I'm very comfortable saying we're targeting 2 million ounces. And because you've known me for years, I only ever said a pathway to 1 million ounces. We've achieved that. I'm very comfortable saying we're targeting 2 million ounces. And I could tell you where we could drill. I have 100,000 meters in drill targeting right now if we wanted to do it, but it's just that balance of, not diluting the shareholders too much, of which I'm one. I used to own 20% of this company 5 years ago. I diluted myself down. So it's just trying to find that right time and mix. And it's taking longer than we thought, but we're pretty happy. As you can tell, I haven't lost any enthusiasm. But yeah, we have optionalities. I think this is my beliefs now, but don't read into this. I'm just making it up. There's no way that the Newmont's going to let someone buy Scottie for too cheap. I don't think they want Ascot, otherwise it would have bought him already. But they still recognize it. They have empty trucks 40 kilometers from where I'm at right now, going back to Bruce Jack every day. So I think that could give us potential insurance there. There are the synergies that we have with the mill beside us with Ascot once they get their feet on solid ground. And I really, there's a motivated group there. I mean, they're getting more money. I know it's shocking for a lot of people, but you couldn't build that thing for $1 billion. It turns. And so I'm hoping the best for that team because it's been a really, really difficult time for them. And then, like I say, we could go standalone. I just got to find the team who wants to do it, and I'll just move out and become IR or something. But you know what I mean? There's no question that we could do it. And, if the market rewarded us a little bit, it would give me the confidence I'd raise a bigger amount of money and drill 100,000 meters. I'm just caught in a rock and a hard place. I can't do it right now. I mean, I could, but it's probably not good for the people who've supported me up to this point, of which, I've got a lot of great support. I can't figure out the stock market with all this volume because like everybody's claiming they still own their shares. And I have a lot of, I have a trophy case of some of the bigger guys in the business who've been supporting us. So they're not unhappy. And if they were, then I would do what the shareholders want me to do. I really would. Right. So it's just business as usual. It's frustrating, but yeah, we're excited. I've got, even with 10,000 meters, a lot of people went down on their drill programs this year. And so we've got news flow of which perhaps not a lot of other people have done that quite that much. So a few guys have done more, and that's great. But I think there's a lot less drilling than last season in our area than in the past.
Boy, you're saying it, Brad. I mean, a lot of companies we talked to downsized their drill program. They were going to do 10 and they did 5. They were going to do 5 and they did 3. They were going to do 3 and they did, 1,800. So the fact that you went from 6,000 to 10,000, I think speaks to what your team usually does, which is over deliver. But let's also talk about, you say you have these 100,000 other drill targets in your mind. I think an area that we should talk about that's got some blue sky upside for investors is the D zone. That's an area of growth. I think you did get a little drilling in there this year, but we haven't really talked about that. We talked about the Scottie Mine area. We've talked about the Blueberry Contact Zone. Talk to us about the potential at the D Zone.
Hey, so D Zone's pretty cool. Although a couple of those results that we put out today are quite low grade at D Zone, but that's okay. It's just geometry. What's neat about D Zone is that there's a tunnel, there's a 2 kilometer access tunnel to get to the Scottie mill. And we found C and D Zone. I mean, there was some historic work there, but basically Thomas used a pen magnet and he was going through the tunnel, right? And he goes, oh, click, click. Okay, it's magnetic here, peritite pyrite. There's a magnetic signature. Those ounces are all above your head in that tunnel of what we see. And we've got some fantastic results. We put out some lower grade ones today, and there's more to come at D. It's just like Blueberry. We don't have enough drill holes into it because we had one hit 2 years ago, and then last year we had like 4 or 5 good ones. And so that's developing. And we haven't been back to Domino in 4 years. We want to. It's just it takes a helicopter. It's that one that costs just a little bit more, not even a whole bunch. But because we're having this success that we have at Blueberry, there's no use for us to go over there. But we've got a 6 kilometer trend in around the intrusion there, and are all 10-gram hits all across the whole thing, and so much more to explore. Domino has 10-gram hits. C and D have 10-gram hits. The Ben Vein, Blueberry, Scottie, they all work together. And I encourage you to go look at the maps that we have on the presentation and even on the news release. And then we drilled a new one this year called the Golden Buckle. So that would be in between C and D and Scottie. So we identified similar geology. I don't have those results back yet, but I'm encouraged. I'm excited. We are familiar with the rocks, and so yeah, we're excited. And so we did drill a couple holes outside of the normal for the last 2 years, because the last 2 years really just been Blueberry, a little bit at Scottie, right? And C and D's essentially is Blueberry. It's just one of these veins that seem to run longer than the 40 meters either side of the contact. So it needs a lot more holes, but it's extremely encouraging. Like you can see the results that we have there. So, there's more than just Blueberry and Scottie. We haven't gone back to, I'd like to go back to Georgia River, which we haven't drilled in about 3 years. And we haven't gone back there because it's just a little further away. And it's good standing for us for 10 years because we drilled it enough. Oh my gosh, it could be in its own company, Georgia River alone, right? We've got 4 hits over 100-gram meters all along their southwest vein, and it's more of a classic quartz system. So we've got lots more than just what we're doing. But, we've always been shorthanded. I think we've done a hell of a job. I'm very proud of what we've done. And like I say, that first resource is going to come out, but we've always been the small guy in the corner that no one believed in, right? The little engine that could, but I think if we get close to that 1,000,000 ounces with only 50,000 meters of drilling, people have to sit up straight. It's an extraordinary achievement.
Well, it absolutely is. And I think it just speaks to what kind of results you're getting with those 50,000 meters. I just thought it was nice that you just went through, aside from the Scottie Gold Mine and aside from Blueberry, where the majority of the work's been done, you got Domino, you got the C&D, you got the Golden Buckle now. So you got these other areas of growth to start pushing towards that 2 million ounce goal. And so I guess just a lot of work the company has done already. The drilling that you're going to keep releasing to the market, just walk us through the catalyst coming up. I know it's a lot of drill news, but is there any other work the team is doing on de-risking? Anything else you want to highlight as far as news flow coming out for the balance of the year and then rolling into the first quarter of next year?
Yeah, no, I think we've got a lot more news coming. It's starting to trickle in right now. We're not disappointed at all. It's business as usual. It's not going to be any better, not going to be any worse. But how can it get any better, anyways? That's how we see it. Of course, we'd love to have a 500-gram meter hole or something. And hey, you know what? It's a mystery. We still got lots of results coming in because we just stopped drilling oh man, 5 weeks ago or something. But it's quite funny. There's a lot less happening, but it seems I never complained about getting assays in, but it seems a little bit longer than normal than we have in the past. But at the end of the day, if the market's not there, I'm not too concerned. We put out news this week. I was kind of holding off on it a little bit, and because it's not super material, I was able to do that as a president. We weren't wink, wink, nudge, nudging with anybody. No one even knew it was coming out today. We needed to see what Ascot was going to happen. Where they going to get? They had this extension. Everyone's freaking out. We're going, okay, it doesn't matter what our results are. Everybody's got their eyeballs on Ascot, and I think we get painted with an Ascot brush. And we're not out. You've been talking to me for years. We're not rah 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 Ascot. We're part of that, but inadvertently, it's hardly can have a conversation without somebody bringing up Ascot to me. I'm going, but I'm Scottie. What at this stage, it doesn't matter. But anyways, I think the market kind of paints us and assumes a lot of things there. So,
well, you still got a lot of drilling to report, but also let's just wrap up, Brad, with the financial health of the company. As you stated, you got enough money in the treasury that you can do a big drill program like this or even bigger next year. Speak to the financial health of Scottie.
Sure. So at the end of the season, and so I'll like right now, I don't know, I got $8.5 million in the bank or something, but a lot of bills are still kind of coming in. So the way I kind of forecast and look at it is I'll have 7 million hard dollars in the treasury at the end of 2024. That's extraordinary. Being the nature that they're all hard dollars. I'm sure a lot of guys would be envious of that. So, technically I could do 15,000 meters next year, not raise money. So that's a good position to be. We don't owe a dime on any piece of property. Everything's paid for, right? No JVs. A lot of guys have properties and still owe 10 million on it or whatever that number is, right? And, earning into their properties. We've paid for it 100%. Both George River and Scottie, if we never did anything, we could just sit there for another 10 years because we've done so much work on those properties. And the Cambria, which is a fantastic piece of land, we still go map and I mean, we got bonds and drill permits there. We just are not willing to, if I'm pulling out results like I do at Blueberry, why go drill something brand new? But it's there. And when the market's healthy, well, like I say, my dream is I'd like to put 6 drills on and I just can't do it at a 17, 18 or 20 cent stock price. You just can't do it. And but when I first started out, I didn't have targets. I had no money, but I didn't have drill targets either, right? You kind of have a few ideas and you hope that they work out. Well, they've worked out. And every time you have a successful hole, you can plan 4 more holes. Well, now we're like just triage. We're just trying to get the best that we can do, but there's so much more we'd love to drill. Like we'd be very comfortable drilling 100,000 meters now in a season. It's just finding that, just the economics of it, just finding what's good for the shareholders.
All right. Well, let's wrap it up there. I think that the takeaways for me is that you're cashed up, you're permitted, you got lots of drill results to report, and you got plenty of targets for the future for future drill campaigns to keep pushing the envelope. The goal of the resource that you have, is to really set up an economic picture around those resources and show people the value of these ounces. So we'll keep following along here at the KE report. And if people listening in would like to follow along, definitely click on the link below this interview. It takes you right over to the Scottie Resources website, and there you can follow along with the news as it hits the market. So as more drill results are released, you can keep posted, and we'll definitely be talking with yourself, and I think even Thomas in the future, the VP of Exploration, just to dial in to some of these results as they start hitting the market. So Brad, it's going to be exciting to follow along and looking forward to our next conversation.
Appreciate your time, Shad. Good talking to you.